Hello, hello, hello. Welcome, digital pioneers. Today, we're going to be getting into tax strategies for online content creators. That is you guys. If you're earning income through blogs, vlogs, videos, podcasts, or any digital platform, this session is going to be crafted just for you. We'll be simplifying tax tips to boost your financial savvy into the digital realm. So, before we get into this awesome topic, let me introduce myself. So my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So come on over here. Let's talk about tax strategies for online content creators. That is you guys. So let's get going with income statements and reporting. So first up, recognizing your income streams. Income streams and reporting. That's what I meant to say. First, we're going to be recognizing what your income streams are. So whether it's an ad revenue, sponsor content, affiliate marketing, or memberships, each income source needs to be reported. So you want to keep clean records from the start from the start, making this step straightforward. So I often recommend, and if you did not see the playlist last year, Pathway to Financial Mastery, was it last year's? Or it might have been earlier this year. I think it was last year, Pathway to Financial Mastery. Come on over here on YouTube and check out that playlist and go look for when I did the session on categorization of organizing your books, and it's going to show you how to break up your income in categories for your books. If it wasn't in that Pathway to Financial Mastery, then it was in this year's playlist, 2024 Business Growth and Tax Mastery, like the first 2 weeks. It's going to be in there. I can't remember which one at this particular time. It's going to show you how to do that. So your income streams, like I said, if you have your ad revenue, so you want to have, and this is a nice way to, if you do it this way, it's going to be a nice way to organize to see where your income is coming from in one place. So let's say you have your ads revenue, like your YouTube ads, your TikTok ads, that's, you're getting paid on those particular channels, Facebook, whatever. Then you want to have that notated in your books with the name so that okay, this is how much I made from YouTube. This is how much I made from TikTok. This is how much I made from Facebook or whatever. You want to list down the revenue sources. Your affiliate marketing, you have that listed in your books, and then the affiliate marketing payments will go there. Your memberships for your programs and things that you have, your coaching program or whatever, you want to list that out so that when you look in your books at first glance, you don't just see $100 million in there and you don't know where did you get this $100 million from. It's a combination from all of them, but you can see at first glance what went where you're making the most money, where you're probably not making as much if you organize it in these books, okay? Next, you want to talk about your deductible expenses. Again, go back and catch that so you can see how we did the income and expenses, categorized it in that Pathway to Financial Mastery towards the end, or it was in the beginning of the newer 2024's playlist, Business Growth and Tax Strategy series, okay? So now let's talk about those expenses. So many costs associated with content creation is deductible. So like your website and hosting fees to equipment purchases and even part of your home, your internet bills can be deducted. The key, and this is very important, the key is these expenses must be directly related to producing and maintaining your content. So you can't just write off your internet because you like to watch Netflix. It has to be related to your content creation. So if you're writing off Netflix, it's because you are using Netflix in your presentations and things like that. I mean, I'm not making it. That's probably not the best example. So let's just say YouTube. You're paying for YouTube Premium, right? But your YouTube Premium have nothing to do with your YouTube channel because you're not even on YouTube. You're on Facebook, but you're not promoting on YouTube. So you're paying for YouTube Premium, but you're charging it with your business account. No, no, no. You can't do that because that would be considered personal. Now, if you are streaming on YouTube and you're paying for YouTube Premium, guess what? That's a business expense. So you can write that off. So that was a better example than Netflix. Netflix is a terrible example. Don't mind me. Don't listen to that. Home office deduction. So again, we talked a lot about this in the home office. Oops, sorry, my phone is ringing. We talked about this in the home office, talking about that 8829, how I went down to break down how to complete the home office expense earlier in this year on the 2024 Business Growth and Tax Mastery series. So go back and check that out where you can see the home office deductions. So for the home office deductions, for those transforming a corner of your home into a studio or office, the home office deduction is going to be a gem. So it requires that the space is used regularly and exclusively for your business. Calculating this deduction can be done in two ways. It's either going to be simplified or it's going to be regular, depending on which benefits you more. So the simplified method is going to be a real quick. You're only going to get about so much for it. Of course, the regular way is going to be where you can get it detailed and you can really write off a lot of more expenses this way based on the square footage of your home and the space that you're using to do your recordings and your business and things like that. Okay. Next, self-employment tax and quarterly payments. Now, I know you guys don't like to talk about this one. You don't like to pay it. You don't want to hear a thing about it. But if you're content creators and you're out there on the online digital world, you definitely want to be talking about this and you want to listen to this because you're likely making enough income that you should be paying estimated taxes. Okay. So as a self-employed content creator, you're responsible for self-employment taxes, covering Social Security and, of course, Medicare. So to manage this, making estimated taxes quarterly, those tax payments can help you avoid a large tax bill after you finish the year, okay? During the tax season. So when you have made your every single quarter, so the quarter is 4 quarters in a year, every 3 months, and we go through a quarter. So roughly every 3 months, you go and calculate how much income you have made in those 3 months period and multiply it by 15% and sit that to the side if you have not and pay that estimated tax payment. So let's just say, for instance, you went through 3 months. Well, this is now we're in April. So you went through the first 4 months. So we already passed the 3-month period. So now that we're in April, or you go ahead, or we're coming up on April, you go and you calculate your estimated taxes. So let's say you made $25,000. I'm going to put it in my calculator. 25,000 for the last 3 months from January, February, and March. Okay. So now we're going to multiply that by 0.15. Okay. So that is $3,750 in estimated taxes that you potentially have to pay on that $25,000 that you just made because you're out here making content. Okay. So you're going to go ahead and pay that to the federal for your federal estimated tax payment. Now I would say you would then go down and then you have to pay your state. So figure out what your state charges, what is the cost for the state taxes, and then you go ahead and remit that. So I would recommend putting away 20%. So if we do 25,000 times 0.2, that is 20%, that is $5,000. So go and put that 15% towards your federal, and the other 5%, you can put that towards your state taxes as an estimated tax payment. So when the year is up and now you've made $100,000 because you made roughly 25,000 every quarter, you've already paid these estimated tax payments. You don't owe a grip on your taxes when you go and you file. Okay? Easy, right? Next, we're going to talk about retirement savings. Again, go back and catch the previous playlist where I talked about retirement planning, okay? So retirement savings, planning for the future. Retirement accounts like your SEP IRA or those solo 401ks are not only tax smart ways to save for retirement, but also decreases your taxable income right now. You're not later, not next week, right now, okay? Because if you put a little bit towards your retirement, it decreases the amount of income that is taxable income that you have to pay taxes on, and you get to save right now, okay? So let's do a case study. Jamie's journey. So Jamie is a vlogger, just like you guys, leveraging tax deductions for new filming equipment and a portion of her home internet and utility bills as business expenses. So by consulting with her tax professional, me, she optimized her deductions, and even set up a SEP IRA, lowering her taxable income significantly. So keeping meticulous record, we always have to talk about record keeping, right? The cornerstone of smart tax planning is diligent record keeping. You want to have clean cut books. You want to use digital tools or apps to track your income, your expenses, and receipts throughout the year, or you come on over here and hire me as your bookkeeper. This habit pays off by simplifying your tax filing and supporting your deductions. So you want to have these receipts and all these documentation because you have to show substantiation when you take these deductions and some of these credits. Substantiation means show proof, okay? So seek professional advice. So while these tips offer a foundation, individuals' solutions vary. So consulting with a tax professional, come over here and see me, can provide personalized advice and ensure that you're making the most of your tax strategy. So I'm going to pop my link up there, bit.ly/SD negotiator, and y'all come see me to get these records in order, because many times, gonna lie, you know it too. Your records is a hot mess because you're not really taking care of it throughout the year, because it's tedious. Especially the money that you guys are spending, the money that's coming in. It's hard to keep up with all this documentation at times. That's why you come on over here and see me, Shane the negotiator, and I got you. Take care of all that for you. You don't even have to worry about it. You just gotta show up. That's it. Got you. So in conclusion, making this short and sweet, tax strategies for online content creators is about recognizing your business unique aspects and navigating tax obligations smartly. With the right approach, you can minimize your tax liability and keep more of what you earn in your pockets or in your business pockets. So some teasers for the next session. We'll be tackling maximizing deductions, last minute tax tips for entrepreneurs. So don't miss out on these critical end of year strategies to reduce your tax bill. So as we're coming to start wrapping up tax season, I'm going to be giving you some tips and stuff over the last couple of weeks so that you can start to prepare for the next year's tax season 2025. Okay. So in closing, thank you so much for joining. If you found these insightful, please like, share, subscribe. If you have not done it yet, come on over here to the YouTube family. We nice over here. If you're on Facebook, IG, TikTok, everywhere else that gets the reels or wherever, come on over here, YouTube, subscribe to the channel, share the content, comment on there, click the link to schedule some time to sit with me, do whatever you need to do. And until I come back next time, I hope you guys have a great